to Mortgage Unlocked, where we break down the money side of real estate in plain English for you. I'm Judith Duncan Christie. I'm a realtor. I serve New York and New Jersey. We serve buyers, sellers, families navigating life's major transitions in both states. Joining me today is one of my favorite mortgage lender, Mr.
Isaiah
Philo. And we both work, well, he's the preferred lender for my broker in New York, which is Howard Hanna. So today we're gonna go through some questions or some things that you should know. 10 things that can kill your mortgage before you even get to the closing table. So here we go. Don't do this before closing.
Yes, please, the number one thing, or one of the number one things, I should say, one of the top 10 things, is please do not buy a car while you are in the mortgage process. This comes up so often, but buying a car impacts you really in two different ways. So the first way that it impacts you is impacts your credit, because when you go to buy a car, they're going to pull your credit. They're going to shop you for different banks and figure out what bank works best for you for the car. It's going to impact your credit and it's going to drop your credit. And the bank that's doing your mortgage will know that. At the end, they will find out. The second way that it impacts you is that it will increase your debt to income ratio. Your debt to income ratio is all of your monthly debts added together divided by your monthly income. And if you add to that by buying a car, if you add to that by adding a car payment into your debt to income ratio, you might not be able to afford the house anymore.
Right, because you'll have less money to spend on mortgage. At least that's what the bank's going to be looking at.
Sure.
How about opening a new credit card?
Yes. Never open up a new credit card during the mortgage process. The bank will know, and it may not kill your mortgage, although it might, because it could drop your credit. But at the very least, opening up a new credit card is going to create a headache for you. It's going to create more paperwork that you need to submit, and more things that the bank needs to look into.
Talk to them about financing furniture.
Oh yes, financing furniture.
Don't buy the furniture before you close on the house.
Buy the furniture after you close on the house, not during, because again, it's kind of like the credit card thing. It may not kill your deal, but it may. And it, again, just like the car, it's going to add to your debt to income ratio, and it may make it so that technically, from the mortgage bank's standpoint, you might not be able to afford that house anymore according to their standards.
Right, and you're gonna get frustrated when the lenders are asking for more paperwork. All right, should someone quit their job?
No, absolutely. This happens far more often than I would like. Someone will be halfway through the mortgage process and decide they don't want to work at their job anymore and quit their job and go to a new job. And they'll say something like, oh, but my new job pays me similarly to my old job or more or whatever. Do not, if you quit your job and go to a new job, it then restarts, how should I put this? If you quit your job and go to a new job, it can greatly impact the income that the bank is able to use. The bank is able to use according to conforming loan rules. We're only able to use certain income. If you switch jobs, for instance, if you are a mortgage person or a real estate person and you get paid through commission, if you then, or no, say you're a salaried employee, and you quit your job to go into real estate because you know you can make a lot more money in real estate. It's a great career, and it is a great career, and you can make a lot of money. However, real estate is a commission-based job. If you go to a commission-based job, you then have to be at that job making that commission for 2 years for the bank to be able to use that money. So you could then make it so you can't, not only does it kill your deal that you're in currently, but you will not be able to buy a house for 2 years. And if do switch jobs, rest assured the bank will know one of the last things they do is a verification of employment. They simply they contact your employer to make sure you're still there right at the end of the mortgage process. So I've had people try and hide it, like they quit their jobs and tried to like not tell me. The bank always finds out, and then it's at the last minute right before closing too, and it's awful.
It is. I've had that experience more than once, and it's not pretty. Okay, how about making unexplained large deposits?
This is another one of those. If you're making large unexplained deposits, it's one of those that, one, it creates a headache for you because the bank's going to see it because they're going to need your bank statements and they're going to need to make sure that you have enough cash to close. And they're going to ask about those. They're going to need documentation for those. There's legal reasons for that. They need to legally trace the money, because if they don't, then you could be doing what's called in the business money laundering.
Right.
And even if you're not, even if it's just cash from your grandmother, whatever it is, it could be perfectly fine. The bank needs to legally be able to trace it.
Has
So
to be traceable.
yeah.
So you can't take your money from your bag or some stash under your bed or wherever and just stick it in the account.
Yeah.
And say, okay, now I have my closing costs, now I have my deposit. It doesn't work like that.
Nope, the money needs to be traceable.
Yes, seasoned in your, how long does it have to be in the account?
Well, as long as it's traceable, it could be that, right away you could use it.
Let's talk about moving money between accounts.
Yes, this happens all the time. And it's fine. I understand why people move money in between, large sums of money between accounts. They're just trying to get things ready. I get it. However, it then creates just a firestorm of paperwork that the bank is going to need, because again, the bank needs to trace the money. So they need to see where the money's coming from and where it's going. And if you're moving money around a lot, that's just all the more paperwork that the bank is going to ask you for.
Can I, as a buyer, co-sign for someone else during that process of purchasing?
So during the process of purchasing, I would not recommend co-signing for someone else, because again, it'll impact your debt to income ratio. If you are co-signing, even if you're not making those payments, the bank has to count that debt against you, because if those people don't make the payments, you're then liable for the payments. So it can impact your credit, and it can again impact your debt to income ratio, similarly to buying a car or furniture.
Okay. Should I miss my payment? I'm gonna put some money aside to buy the house. I'm not gonna make my car payments. I'm not gonna make my credit card payments. Should I argue about my credit card at this point in time?
No, this is not the time to fight against a charge that you don't want to pay or anything like that. Make your payments and make them on time during the mortgage process. If you don't, it can greatly impact your ability to purchase the house. I've seen it be where someone refuses to pay for something during the mortgage process, and then by the end of it, their credit dropped so much that they couldn't buy the house anymore. It's very sad.
You hear that? Okay. What about changing my financial information without letting my lender know?
Oh yes, changing your financial information. Again, you can do it, however,
Everything has an impact.
it
or
does. And it's gonna create more headache for you. It's better to leave everything as is, do it exactly as the bank directs you to do it, and don't do any more than what the bank tells you to do. Because if you do any more, if you're moving stuff around, if you're changing your financial information, it's just more paperwork and more things you're gonna have to then get in, and it's gonna delay the process and delay your closing.
Okay. What's the most surprising thing you've ever seen a buyer do right before closing?
Oh, one time, right before, so this one was a triple hitter. This buyer quit their job, got a new job, which okay, we got it all set up with a new job, we figured it out, they were able to buy, then decided they didn't like the shift they were on at the new job, so then they took a pay cut at the new job.
Ouch.
and dropped to a different shift. And then finally, we got this person ready to close, and they were bringing me some paperwork, and I see them pull up, and I looked, and they had a new truck.
It's a new car.
Yeah, I looked at it, I was like, oh, that's a different car than what I've seen before. And I asked him, and he's like, oh yeah, do you like my new truck? And I was like, no, I do not like your new truck, and this is gonna create a whole nother thing. So they did like 3 of the worst things that you could possibly do. But eventually, we closed, and it was okay. But it took a lot, and it took a long time, and the sellers were not happy with them.
So you extended.
Oh, it extended it to like 6 months, yeah.
Oh, dang. Alright, so.
Oh, here's another one. I have another one. Another thing that I shouldn't say this one. It just happens.
Go ahead.
Yeah, but if it goes on social media, they'll know that it was me saying, and it was pretty unique. I shouldn't say it. It was too recent.
You hear that? Somewhere down the line, we'll give you another juicy story. Just
Yeah.
not today.
Not
It's
today.
stories. Alright, so if this conversation helped you to understand the mortgage process and you have any questions, please reach out to us. We're happy to help. We're always here. Subscribe. And we'll see you on the next one.
Bye guys.